All right, so we are well off the lows of the session, but of course the Dow's still off more than 460 points. Here's an interesting thing. We are seeing some buying starting to materialize in some interesting areas. First of all, the non-tech momentum names, right? Because we kind of lump them all together, but technically Amazon is a consumer discretionary name. It's having a great session today. Netflix is having a great session. Alphabet, they're considered consumer services, communication services names. They're up even more. Believe it or not, they are now starting to consider those names undervalued, along with the home builders. So when the market's like this, when it's been going up and down like crazy, not like a yo-yo, but something even, I can't even describe it. The volatility has a lot of investors wondering what to do. Many just want to sell at a loss. Here now to help share some of the advice that she gives her wealthy clients at Walser Wealth Management, President and CEO Rebecca Walser. Rebecca, thanks for joining us.
Thanks for having me, Charles. Glad to be here.
I'm glad to have you on because, a lot of times we get the traders on and they're flat. They're all in cash. And the average person watching is not going to go to cash, all cash one day. The person with the 401k isn't going to go to all cash one day. And the person out there trying to be an active investor wants to know how come it seems like when it's all said and done, rich folks who use someone like you seem to come out okay.
Yeah. Well, I think the first thing to do is take a deep breath. And I'm like you. We don't even know how to quantify or qualify all of this that's happening because we have a very pro-business president who's, willing and able to attack trade, which we need, I think, in this country. But yet we still have a very aged bull market, the longest ever, and it's showing its signs, right? So we've got geopolitical risks that are happening. We have arrests of people, and, so we've just got a lot of things that are happening that are going to make the market teetering. But what you have to do is take a deep breath and not react emotionally, because we know the worst thing that people can do is to make an emotional decision. Once you start to think rationally, you have to figure out how much time do you have on your investment horizon. And so if you are 10 years or less from retirement, then it is very important to make sure that we have a plan to deal with this volatility. Because if we do see with the inverted yield curve this week, Charles, if we do see the beginning of a recessionary period, we really can't have people that are 10 years out from retirement or less go through a 50% loss, because it just takes up too much time to return, make that back. So we have to figure out where they are in their investment life cycle. But if you're 20, 30, or 40, you're exactly right, and you're in your 401k. What I like to do as a tax lawyer is talk to them about now is the time to make some Roth conversions, because we definitely want this money to go into the tax-free bucket.
So let me ask you then, as far as stocks are concerned, right, we're seeing today, even in today's session, that there's starting to be some nibbles, right? Home builders are looking good despite the avalanche of bad home news. Maybe they're oversold. Some of these momentum names, believe it or not, are considered value names now. They're moving. Visa's made a 7-point reversal to the upside. Again, not necessarily timing per se, but does that underline the fact that there is fundamental value out there that people should appreciate and probably have a piece of the action?
Yeah, I think so. I mean, if you look at the fundamentals, Charles, they're strong, right? I mean, look at the unemployment numbers. Look at our job growth numbers. Look at our GDP numbers. We do have a strong economy, which is why this is such an odd economic period. It's really hard to quantify and qualify and say, this is what's happening. We're pre-recessionary, because this is not the normal numbers that we would have economically. I mean, we had all-time highs October 3rd. Yeah. It's December, 6th. So obviously it's a very difficult time to go from one high to the other. If you look at the underlying fundamentals, I agree with you. We have a president who is a strong economic pro-business president who is doing what he needs to do to make sure that our fundamentals are there. But we still that is against the backdrop of the longest bull market in the history of our country, and it's showing its signs. And then you combine that with the threat of geopolitical, trade and China. We're getting this mixed bag of craziness, which is what we're having right now, which is why I'm saying don't react emotionally.
Every now and then, Rebecca, I wake up with a sore. I don't know where it came from, so I'm like this aging bull market, right? I'm ready to go, but just showing a few signs myself. But we're both going to be okay, I think. Hey, love your insight.
I think so.
Thank you very much. Appreciate it.